Here we go. Market week stock market for the next 1 to 3 months. I'm going to start out looking at the VIX because we have been talking about the likelihood of a market peak coming in June. We've talked about this for months, and here we are with our expectation that the market would make a new high. And that it would potentially even see higher prices, but then it would end and get into a serious period of risk. We think that period of risk is just out there. And if you didn't catch the segment that I just did on 6 of the important market leaders and how negative they are, then I think you should look at that because it's supportive to the fact that between now and August, there's likely to be a pretty significant pullback in the market. Whether that be a big bull market top or just a correction, well, that doesn't really matter. What matters is there's something not too far out there that's likely to see the market moving to the downside. Let's take a look here as we switch over from Tesla, which I just showed, over to the VIX. Now, I'm looking at cycle analysis on the VIX. People would look at this and say, what is that chart if you've never seen it before? Well, this is cycle analysis, and this shows the harmonic families on the VIX. In other words, when is it likely that there will be an upside pop in the VIX? In other words, demand for puts, because implied volatilities go up, and when is there going to be a likelihood that the VIX goes lower? Well, this big uptick that you see here in the VIX, of course, was the COVID panic, where we got up here into the 80s in implied volatility. That came right where this bottomed. You can see where there were 1, 2, and 3 cycles that were entering into rising phases, where you got that. So if you look at where 3 of them enter into rising phases, here you got this upward move. Right in here, these were pretty subdued in a very strong market condition. Then you got this panic, you got this up move here in this second part of this cycle right in here, and now we are getting right in here, where we're likely to get another upside move in implied volatilities. This is probably not going to be one that lasts an exceptionally long period of time. As I just zoomed in here, you can see that, well, this comes up into July, maybe early August, and then comes down. Now, our projection for the stock market decline is to go into late July or as late as mid-August. So this is kind of in alignment with this. We look for the VIX to make an important bottom in the next few weeks. Now, when I look at the daily chart, which is also has excellent cycle patterns on it that you can see right in here, what this suggests that the implied volatilities are about to make a low. As you can see, we're right in that spot where that low is likely to be made. And then there's another low out over here, which comes somewhere out towards the end of June. So maybe you get a brief pop here in implied volatilities, and then you settle back again. It's really somewhere around the end of June that it feels like market acceleration to the downside could come. Looking at this, I'll show you the side-by-side right in here, and you can see that we are in this period right here where we're in the next few weeks likely to start to see sizable upside move in implied volatilities, and right in here a potential upside move in implied volatility, and then some important lows coming around the end of June in the VIX, which says that July is very likely to be a period when implied volatilities move up sharply and the S&P 500 and the rest of the markets move down pretty sharply. That's what we're looking for, and implied volatilities are telling that kind of a story. So there's that weekly right there. How does that line up with the S&P 500? So here is the SPY index right in here, and we were looking for a modest correction here into May, and then we were looking for another rally to new highs. So that's this cycle right in here, the modest correction. It bottomed a week or two earlier than we expected. We thought it would get down as much as 4%. It got down about 4.2%, and then began to move up again. We got up to 424.63. We expected it to test that high or get a little higher, and we said potentially up to the 430 to 432 area in SPY before it moves down. 423 was our target, 430 to 432 a possibility in the SPY, that is still the case. Momentum in here was strong. It is now flattening out. This is our reversal scout, giving a little warning of a stalling right now. But again, we see nothing negative. All time frames are still positive as far as momentum goes. Once this is over with here, we get into the period of risk where these cycles come down together. You can see right in here, this was a 10.8% decline. This was a very strong period. It fell just slightly less than 6%. And this one right in here coming up, we're expecting an average correction into this August period of about 11%. If I look a little bit further out on the charts in here, you can see that where you look at the time period in here where these cycles were bottoming, well, that happened to coincide with the COVID panic, and it was a 35% decline. This one only 6%, as you can see right over here. So it's pretty normal for this one here was 7% right over there. And it's pretty normal for the market to decline, 10, 11% for corrections, and that's what I think is going to happen, even if it's not a bull market peak. And we won't know that until we get this corrective period behind it, and then we get another rally to see what that one looks like. But the risks are starting to grow, and sometime in June, we expect this market to peak and then to get into a correction. If you did not watch the segment I did on these important stocks, 6 important stocks, go back and watch that. Because I think that the timing of the declines and the fact that they've already broken down is in alignment. We have stocks that are going up that are just crazy valuations in the speculative category, and then we have the bigger cap stocks that are stalling or breaking down. That's an important aspect of this market. The Russell moving up, catching up, getting up near that high because they're buying the speculative stocks, but they're all going to move down together. And the first hint of any tapering coming on in the stock market's going to give it up quickly. This is what we consider to be a topping period that we're in, and right now I'm just simply anticipating it, and there is no sign of it yet. And the SPY getting up to 40.30 to 40.32 is possible first. Everything's still in good shape, and we believe that June will see things change, and July will bring downside action. Whether or not our anticipation that this makes the first half peak for the year, I guess we'll still see. But that's what we're still calling for, that the top of the market for this year is being made right now. That is a look at the SPY, the look at the VIX, and the look at the stock market for the next 1 to 3 months, and maybe further out there. I hope you have found this show to be amazingly interesting. I want to remind you to please do go to our website and explore it. If you're new, become a free member, get that PSP, that's the Popular Service Preview, for free. Subscribe to this channel, click the bell so that you get notified. Make sure you give us a thumbs up on this video, and watch our other member videos in the playlists there. You're on Twitter, follow us at askSlim.com, and any questions that you have, please do send them to Matt at askSlim.com.